Good morning. I'm Vince Lancy. This is the GoldFix Market Rundown. Goldman Sachs in August delivered what we believe is the most complete gold market guide ever written, and it explains why gold does not trade like other commodities on Earth. That is a must read if you're a new subscriber. And it's a must revisit if you're an old subscriber, because there's a line in there that tells us what's happening right now. CME Group said it will change the way it sets margin requirements for gold, silver, platinum, and palladium futures after sharp price swings and heightened volatility across precious metals markets. Now, the last item on that lovely picture there is actually the most important. There are unverified reports, but credible, of restrictions on U.S. coin sales out of the U.S. Mint, as well as volume restrictions out of Costco. We're going to cover all three of those in a second. Here's the home page. Here's the markets. 10-year yields are down 2 at 415 and change. The dollar is 99.07, down 9. The S&P 500 is down 20. The NASDAQ is down 111. The VIX is up 1, reacting. Gold is 46.34, up $48 and change. Silver is 91.58, up 5 and a third percent. If you're looking for a relationship between the U.S. and silver and China silver, and you want a really quick look, all you have to do is, when you're looking at this screen here, look at silver and say, oh, silver's up 5.43%. How much was silver up in China? 5.89%. Now, it's not exact, but it'll give you an idea of how the spread is. Right now, the high in China was 100, and this was when silver was trading about 88, 90, 89. So we're talking about an $11 spread here, and it's getting wider. And it's getting wider for multiple reasons, which we're not going to opine about right now. But one of them is very bullish, and one of them is China's getting squeezed. How's that? Which is also bullish, but a little bit different than when you look at it that way. Goldman's gold market primer reframes gold as a stock market, not a supply demand commodity market, meaning stock as opposed to stock and flow. Nearly all gold ever mined still exists. Mining supply barely moves with price, and prices are driven by conviction buyers like central banks and ETFs. The report shows conviction flows explain most price direction, while emerging market buyers set the floor. It also details how London, New York, and Switzerland connect the physical and paper markets. It is must read. Next, and this is probably the most important story out there if you're looking for incremental problems at the margin. Unverified reports of restrictions on U.S. coin sales continue to circulate as the U.S. Mint delays its 2026 Silver Eagle release and Costco limits silver purchase volumes. Now, while no official suspension has been announced, supply chain behavior suggests mounting pressure, underscoring why early signals in physical markets should not be dismissed. Now, just to give you a little color on that, there are two separate stories that seemingly are unrelated. And we're going to give you the reality, the rumor, the reality, and why you shouldn't ignore the rumor. The rumor. Costco is limiting purchases of 1 ounce per customer. The other rumor, the Mint is shutting down all numismatic sales. All right. The verifiable fact, and then we'll get into what's right about the rumor. The verifiable fact, Costco is getting picked off every day. People are going in when silver rallies $5, $10, and they're going in, they're buying 100, ounces of silver. So when the price of silver rises during the day, you just pile in there if you're a contractor and you buy as many as you can. And so what they're doing is they're seeking to control how much money they're losing on these. These are a loss leader now. All right. So how do you do that? You do that by saying it's not 1 ounce per customer. It's one sleeve of 20 ounces per customer. And you can go back and do it 10 times a day, but only one per purchase. So it's like, oh, silver's up $5. I'll go and I'll buy a sleeve. I walk out the door. I come back in. I buy a sleeve. They're limiting one per customer per transaction. It's hilarious. So if you have like 8 kids and silver's up $10, just fuck them. Just go in and just buy them all. You know, um, whatever. They're not gonna limit how many you can buy when the price is trading 50 and they're selling them to you at 80. Fuck that. All right. Sorry about the rudeness, but be a capitalist about it. Okay, so that's the Costco situation. Now the U.S. Mint situation is it is a fact that they've delayed the 2026 coins out to apparently February 26th. Now, I'm not sure if it's February of 26 or February 26, but suffice to say, they're delayed. And they're delayed because, well, the story you're going to hear is they're delayed because of price volatility and they're trying to set the price so they don't lose money. They want the market to settle down. And maybe the market will settle down between now and when they release it. But the reality of it is, if price is not settling down, that's because metal's not available. And we don't know how much metal is available. Now, with regards to the numismatics, there is a David Bateman and Silver DeGen have been noticing this, and I count them as credible, obviously. Uh, that there's a U.S. Mint uh, memo circulating saying numismatics, I'm not sure exactly what it says, but numismatics will be delayed, or numismatics might be stopped, or certain numismatics just might not be made this year. I mean, all this shit points to a lack of silver. Okay. It's the illusion of liquidity. But anyway, so that's the that those are the facts. Now, why you don't ignore the rumor part of it? The rumor part of it. They're out of silver. They're this. They're that. You can't. It's real. Okay. Here's what I mean. 6 months ago, we reported that Japan was restricting the amount of uh, bars you could buy, the types. So you can only buy a certain type. They weren't resmelting, they weren't refining, they weren't making new bars for the public because we believe and still believe that they were making them for the government. The government is sucking all the metal up the supply chain. Same thing is happening in North America. We're sucking all the metal out of Latin America. Same thing is happening in Thailand. You can't buy gold anymore. In China, we want you to buy gold, but it stays here. Eh, Metal is being hoovered up the supply chain, either directly, the government's buying it, or by encouraging people to buy it, for ETFs or what have you. And war stuff. This is war stuff. But that aside, that's why you can't ignore these. How many conspiracy theories have become conspiracy fact? You can't ignore the fact that Japan is restricting what bars you can buy. New customers can't come into an Indian ETF. China is restricting exports of silver. The U.S. is pulling, no one else is reporting this, but I'm telling you, the U.S. is pulling concentrate out of Latin America. The concentrate that China used to get, we're getting now. Okay? You've got, unrelated but related. Canada is going to be selling Chinese EVs, maybe. I mean, this is war. Okay? And during war, you export immigrants and you import metals. And that's what's going on right now. So these rumors of not making any numismatics, I would say that's a 50% chance of being true in 6 months. Rumors of them not having enough silver to make coins, I'd say that's probably not true, meaning it's true, but they're not going to not deliver. A failure to deliver silver coins at that level will be a catastrophic signal to the market. They will deliver these coins and then they'll change the rules for next year, which is what they always do. Here, London, here, England, you want your silver, you can't have it. We gave it to the French. We changed the rules now. They changed the rules. Change the rules, preserve your reputation, and change the rules. Okay, so that's the story. We haven't emailed that yet, but it's right there. We're going to send it out later on today. It's already published. Next story. CME to reconfigure silver margins temporarily. Now, what they're doing here, and by the way, if you're going to say to me, just right off the bat, this is not bearish, okay? I'll explain why. CME is going to raise the margin requirements so that it's actually a reflection of the price. So the margin requirements will go up as the price goes up. Margin requirements will go down as the price goes down. Now, shenanigan risk aside, that's actually the better way to margin it. The reason to understand why this matters, you have to understand two things. The reason they haven't margined it that way in the past is because they wanted retail to be involved in the contract. Even though the contract is too big for retail, they wanted it to be acceptable by the public, accessible. Now they're raising the margin requirements, well, because they have to. But the silver contract is too big. You can't get retail buying it anymore anyway. CME is losing business to ETFs. CME is losing business to crypto products. CME is losing business to Polymarket. Okay? Robinhood has crypto now. Robinhood's going to have prop bets. CME is losing business. Why is this? How is this bearish for silver? I'll tell you how. One of the key aspects of the precious metals phenomenon is the I'm sorry to use the phrase, but the democratization of ownership. So when China encourages its citizens to buy, instead of one person buying 1 million ounces, it's 1 million people buying 1 ounce. And that's very bullish. That's like an IPO. Now in the US, watch, I'll bring this to the CME. The CME is simultaneously raising the margins because they don't want to encourage stupid speculation on the big contract while launching a 100-ounce contract. They want the retail to come back to them. When you create a smaller contract for the masses to use, it's bullish. It's not bearish. It's bullish, and they want to get the retail out of the regular contract. So yeah, it's probably going to be something that they make us hold a bag on at some point, but it's bullish. Raising the margins on the bigger contract while creating a new contract for the retail to buy is like breaking open a pack of cigarettes and selling them one at a time. And everyone's just going to just buy the shit out of it. And then you're going to have Pax Gold, you're going to have CME Silver, you're going to have some Robinhood bullshit item, and you're going to have all these things happen. And it's going to be in your face. It's like, why does a stock go public? A stock goes public because it raises awareness and everyone starts to buy it. Well, this is the awareness. Costco, the US Mint, CME. This is all bullish. It's not bearish. Someday it'll be bearish, but not yet. Moving on. News and analysis, other work that we did yesterday. We're quite proud of the gold operators, the Jesse Livermore Redux. That's a chapter of the book we're working on, and it's about technical analysis and market flows and the psychology of markets. Founders, why are lease rates low if China's silver is so high? I intimated that a little bit some here. And the Michael Oliver interview. Data on deck today is PPI. It's January 14th. Please buy new mugs and sweatshirts in addition to our hats and support independent media. Let's take a look at the chart. All right, we talked about measured moves in silver. Well, my measured move target is, give or take, 93.70. We're almost there. And that's the way it's supposed to happen. You break out of this and depth equals distance. It's amazing, actually. Gold, I neglected to mention gold because, let's face it, silver's just more fun to look at right now. But gold has one too. It didn't have one here, but now it has one. And this one actually failed. See this one here? That's a failed measured move. But this one is not. And this one projects 4,800. So we'll see. I'm Vince. Have a great day.